Comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast. We're joined right now by Tim Stenovic and a very special guest, Barry Ritholtz, sitting in today for Carol Master. Welcome to our audiences across our Bloomberg platforms, television, radio, originals, and our partnership with YouTube. Tim?
I thought stocks only went up, but I guess that, when you hear from Fed Chair Jay Powell, nothing new, then, sometimes stocks go down, the Fed Chair is saying, okay, well, we're still, not to 2%, but we're wedded to 2%. And we could still see some more tightening in the future.
Yeah, I thought it was kind of funny that we've been heading straight down since August, and we have a 8 or 9 day rally, and suddenly the Fed is nervous that animal spirits have been unleashed again.
Seemed like the market kind of wanted to be down today. I hate going to lame explanations like that, but after an 8 day rally, you need a reason to continue rising, and you didn't get any reasons to continue rising, so this is the default scenario.
A default scenario that claws back just some of the gains here, but is that trend line, is it still up? I mean, because I think that's really what people want to know, right? You look at the long-term trend lines, and if you can make a case here that there is a longer-term story, then maybe you get more comfortable with that volatility, with the idea here. But it's funny, as we're speaking, guys, we're showing the Russell 2000, and that's been the big laggard. I mean, we talk about that 8 day rally, but that was an 8 day rally that was still kind of centered around the larger cap names and, more importantly, some of those tech names.
Yeah, and since mid-September, the Russell 2000 has lost about 9.2% versus just a 3% odd slide in the S&P 500.
All right, well, after an 8 day run for the S&P and a 9 day run for the NASDAQ, we're seeing red across the screen for all of the major indices here in the United States of America. The Dow Jones Industrial Average down 0.6% here on the day, roughly 200 points lower than where it was yesterday. The S&P 500 is going to close down by about 35 points, or about 0.8%, right around that 4,347 level, while the NASDAQ down about 128 points, or 0.9%. And we just mentioned it there. The Russell 2000 remains the laggard once again here, down 27 points or so on the day. That's about 1.6% lower.
All right, peeling back the layers of the S&P 500, not every stock is lower. We've got about 125 stocks at this point that did move higher today. Scarlett, 378 did move to the downside.
Yeah, but most industry groups are definitely in the red. You have 24 of them, and we have 3 that are gaining, but it's just barely. Insurance companies, household and personal products, and semiconductor companies barely in the green. On the downside, Tesla leading autos and components lower by more than 5%. Pharma stocks also losing 2.8%, and REITs under by 1.5%.
All right, well, I did manage to find some stocks in the green today, some barely hanging on there. Got to talk Disney right now, up by 6.87% on the day today. Disney shares rising after the company reported better than expected
round that
profit.
Up to 7%, right?
6.7.
Okay.
Yeah, that's what I'll do.
Yeah.
You got to wait for it to settle sometime, That's the excuse I'll use.
He's impatient.
Shares rising after the company reported better than expected profit and vowed to cut $2 billion more in expenses. I will say, I imagine that the end to the actors' strike that lasted close to 120 days also not hurting sentiment for investors. Shares of NVIDIA.
But doesn't that mean their costs are not going to go up? I thought all the cost savings were because they weren't actually making anything.
Okay, yeah, but then you got to create content for people to go pay for Disney Plus and then go watch in movie theaters. Yeah. Although not many people. I haven't heard great things about the newest Marvel movie out there.
Oh, the Marvels?
Yeah, I haven't heard great things.
Yeah.
Let's talk about NVIDIA.
I feel like they're just running out of ideas, because usually it's like individual movies. Now it's just the Marvels, right?
Yeah, that's the new one. Yeah, it's just all the characters.
I think they should just come out with a new movie called Comic Book. How about that?
Just team up with DC for that one, right? NVIDIA shares finishing the day higher by 0.8%, holding on to those gains after a report said that the company has completed designs of 3 new AI chips for China. NVIDIA now up for 8 consecutive sessions of gains. Is that right? Its longest winning streak since March. Look at that. And then Virgin Galactic shares SPCE. Okay, before we talk about today's gain of close to 20%, of 19.2%, we should note that shares are down about 47% so far this year. The company did come out and say that it was boosting its revenue forecast for the fourth quarter. It delivered third quarter revenue that was ahead of consensus. Also slashing 18% of its workforce, pausing space flights starting in mid next year. They're going to cut costs and focus on developing new launch vehicles. Shares of Virgin Galactic higher by more than 19% today.
All right, let's take a look at some of the decliners. There are plenty to choose from, so I went with the biggest decliner in the S&P 500, Becton Dickinson, off by almost a tenth of its market value. The biggest decliner in the S&P, as I mentioned, the medical device maker gave a 2024 full-year profit and sales forecast that trailed estimates in large part due to currency rates. Corteva slumping to a 2-year low. That's another big decliner today. The ag company posted a quarterly loss and sinking sales. It's losing pricing power, and I suspect this is something that we'll see more of from other companies. It says the growth in prices will slow to a low single-digit percentage increase next year. Pretty ugly chart there. And Bill, it tanked as much as 16% after denying reports that it's pursuing any M&A right now. We had reported yesterday that the company, which makes financial automation software to small cap companies, is in talks to buy a digital payment company, but that's not to say that it won't make the purchase at some point. It's just not happening right now.
All right, let's take a look at the yield space because, of course, that's where a lot of the activity was, at least on a settled basis right now. You're looking at the long end of the curve up about 16 basis points, the shorter end of the curve, your 2-year yield up about 11 basis points, and the 10-year up about 15 basis points. But that really kind of obscures the volatility that we saw. On the 30-year yield on an intraday basis, we saw a 22 basis point swing at one point on the day here. You have to go all the way back to mid-March, the last time we saw a swing like that on longer-term yields. And that was largely due because of the unraveling fallout from the regional bank crisis that was just kicking off. Of course, the big unraveling today, guys, came because of that Treasury auction. And I started off here talking with Scarlett when she joined us on set here. I think the big number of the day really is that number that we got out of that auction, which is 4.769% here. And the gap that we saw that bidders had to take versus what was actually traded in the market before, that demand, it just continues to dwindle.
Yeah, what we've been hearing about auctions has been pretty interesting. There's also a story about a hack from one of the primary dealers whose entire system kind of stepped off of the normal process. That could have some sort of effect here as well.
Yeah, and that was a big deal. And I mean, it's funny because a lot of people were scratching their head, ICBC, and everyone was like, "What is that here?" I mean, this is actually the world's largest lender in the world by assets, at least, and they're a huge sort of a settlement shop for a lot of folks who are trading treasuries. So it's possible, it's certainly plausible that it could have had an effect. It might take some time before we get official confirmation.
But I guess the question is, if that is what moved the market lower when that auction happened, then why didn't we see when the news story came out that there was indeed some recovery? Was it what we heard from the Fed chair and about rate moves forward and that the Fed isn't done?
Yeah, well, think about the timeline. I mean, this happened early in the morning, right? Yeah. You did see some movement back in yields once that started to get resolved, or at least it started to become public. But then, of course, you had that auction. Then you had Jay Powell start talking, and I don't know. I'm sure somebody else said boo or somebody to something, and that's why we got what we got.
How does this set us up for next week when we get CPI? That's what I'm wondering.
Yeah. Yeah, it's a big deal. I mean, look, aren't the economist estimates, Barry? And I mean, I don't want to get too deep in the weeds, but we talk about going back down to 3.1%, which is what economists are forecasting, I believe, for the CPI report next week. But, a year ago, we were at 9% or so here. And I know 3% isn't 2%, but shouldn't we be encouraged by this, Barry?
100%. And keep in mind, 3% isn't 2% unless you actually measure housing appropriately. And if you look at someone like Cam Harvey of Duke, who's crunched the numbers, his takeaway is that if you use apartmentlist.com or even Case-Shiller, you end up with an inflation number in CPI that's under 2% because the Fed is working on very stale data. Owner's equivalent rent is not up to date remotely. It's not an especially good measure of housing inflation. And hopefully the Fed is aware of how far behind the curve they are in recognizing inflation has fallen pretty close to their 2% number.
One thing that I've been thinking a lot about over the past few days is what we heard from Fed speakers over the last couple of weeks, Scarlett, which is that yields are doing a lot of the work for the Fed. But since we heard that from Fed officials, we've seen yields come down and stocks move higher. So what does it mean that the Fed came out and said this, but in fact the yields are not doing the
Yeah.
Fed's job anymore. It seems like a kind of a dangerous little cycle.
The
here.
Fed saying that turned the whole trend around, right? I mean,
Exactly.
I think
Maybe
what's
they shouldn't have acknowledged it.
just pretend it didn't happen. Omar Aguilar, who was just with us, was telling us of Schwab that 2/3 of the moves in equities can be tied directly to bond yields, which is pretty remarkable. Forget fundamentals, forget earnings. Day in and day out, the swings are dictated by what happens in the 10-year or the 30-year.
All right, guys, that is going to do it for our cross-platform coverage this afternoon. Thanks for welcoming us so warmly. That's
Hey,
beyond
I like
the
that
bell.
Barry guy. You should keep him around.
We are going to keep him
Yeah,
around.
he's
He's going to
pretty
hang out
smart.
with us for the next
Yeah,
couple
don't
of
tell
hours.
Yeah.
Check us out tomorrow, same time, same place. We're on Bloomberg Originals. We're on Bloomberg TV. We're on radio. And, of course, we're on YouTube.